You know, the thing is, if you're a startup founder and you're looking for funding, there are so many pieces in the equation that sometimes people can be really confused, right? People are desperate and they have no idea how to proceed. So in today's conversation, what I want to do is I want to clarify a lot of things for you. So if you are listening to me right now, you are a startup founder and you are confused about funding, about startup business funding, I want you to listen carefully. So here are 5 things I want you to really pay attention to. The steps. We call it the steps. Step number 1, remember that cash flow is always important. Okay, so if you're looking for a startup business loan, no credit check. If you don't want your personal credit to be checked, or you don't want any kind of a credit check, so I want you to focus right now on cash flow, your liquidity. Now you might be asking me, why am I looking for a loan if I already have cash? Well, it's not about having the cash per se. It's about having showing the lender that you have cash flow potential. And this basically means what? It means you have to prepare something called a projected cash flow statement. I'm not asking you to lie. I'm asking you to prepare something that is rational, something that makes sense, that is realistic. In other words, you got to have very realistic assumptions. And this is not as complicated as it sounds, but it requires some work. I'm not asking you to do it yourself. If you have no idea what I'm talking about, you can actually hire someone to actually do it for you. There are websites. You have Fiverr. You have Upwork. You have freelancer.com. Those websites have freelancers who specialize in this type of things. Okay, and if you need more help, just drop us a comment below, and our team will get back to you and explain things for you. So cash flow is really important. Now, if you have some personal cash, you can also actually put that forward. In other words, let's say you are trying to borrow $200,000 from U.S. Bank, for example. And if you happen to have a good relationship with U.S. Bank at the personal level, and you happen to have, let's say, 10 grand or 20 grand in your personal savings account, you might want to put that forward as well. In other words, you want to talk about that as you're applying for a startup business loan. So cash flow is really important. So the very first thing I want you to do the next time you want to apply for a startup business loan, no credit check, make sure that you pay attention to cash flow. The second thing I want you to think about, you need to actually link the use of funds to operational growth. See, the whole thing is we see a lot. By the way, welcome back to the show. It's really a pleasure to have you here, and just always a pleasure. So the thing is, a lot of startup funders, they're looking for cash. Okay, you want to borrow. Okay, but they're not able to properly create the nexus between the money they're asking for and how they're going to use the money to fund their operational growth. Let me just explain. Let's say you are an online business, okay, and you're selling on eBay, and you want to get a loan to actually expand your business, and you are telling the lender that you are going to use the cash for, let's say, equipment financing. See, there's a problem there, right? Because basically you're an online business and you're trying to buy a truck. You are trying to borrow to buy some piece of machinery. Now, I'm not saying that if you have an online business, you can't use machinery in your business. But what I'm trying to say here is that there has to be a direct correlation between your primary business activities and what you're going to use the money for. Okay, and this is where a lot of startup business funders, they make a mistake. So if you're a founder right now, you're listening to me right now, make sure you double check your use of loan proceeds, because the lender is going to ask you, what do you need the cash for? Make sure that your response to that question is as clear and direct as possible, and that question, your answer, has a direct correlation to your startup's primary sector of activity. Okay, it's important because what's going to happen here is that the lender wants to make sure that the funds will be used properly, but the funds will actually help you fuel future growth, because you can only pay them back if you have growth. Okay, so if they're giving you the cash and you just putting the cash in something that is not related to your primary activity, then the risk of you not paying them back really goes high. So this is why they double check that aspect of things. The third thing I want you to do, if you are a startup founder and you are trying to get a startup business loan, no credit check, after making sure that cash flow is important, after making sure that you have established a direct correlation between the use of loan proceeds and the loan amount, make sure that you initiate the loan convo long before actually applying. This is so important. By the way, I just want to quickly remind you of today's topic. We're having a conversation about startup business loans, no credit check, massive approval, how to get approved, hands down. So what am I talking about? When I'm talking about initiating a loan conversation long before it actually happens, long before you apply. See, the thing is, let's say right now you are planning on, let's say you need a loan, right? And you'll need a loan, like we are in January, and you need a loan in August or July or September. You need to start the conversation right now. Don't wait until June to start a conversation. You want to initiate the conversation long before. What is that? This means that you want to contact the lender for a preliminary conversation. Okay, so if you want to borrow from U.S. Bank or Chase or Truist or an online lender or whatever, you want to start the conversation real quick. So what happens here is that they will ask you a series of questions, and those are like preliminary questions, and those questions will guide you. Those questions will help you understand how the lender will evaluate your loan application when you are ready. And that's the mistake we see a lot of startups doing. Like, they actually apply when they actually need the money. Okay, they start applying when they need the money, but it's already too late, especially if you want to have a startup business loan, no credit check, which is a little more complex and more demanding than a regular startup business loan application. You need to start the conversation early, okay? And part of the conversation has to revolve around the type of business loan you're looking for. Are you looking for an SBA loan? Are you looking for a bank loan? Are you looking for equipment financing? Are you looking for invoice financing? Are you looking for a business line of credit? Are you looking for a merchant cash advance? Are you looking for a working capital loan? So you can see very clearly that there is a large constellation of business loan types. So the earlier you start, the better. The earlier you initiate a convo with the lender, the better. So you can have all your questions answered. All your questions answered. The next thing I want you to do here is to have a business plan, and you also need to have a one-page pitch ready. You know, sometimes when we talk about business plans, people are like, yeah, you know, I don't have time, I don't have money, and my thing is, listen, you have a startup, you are looking for funding, and you don't have $100 just to or $200 to create a business plan, to have someone create a business plan for you. That's just some kind of bull. It's really, really like when we hear startup founders giving us this kind of answers, we're like, wow, are you for real? Are you really you're looking for $100,000 startup loan, and you can't spare $100 or $200 just to get a loan, just to get a business plan? So the whole thing here is that you need a business plan. You need a business plan. It is really a mistake, and we see this from some of our viewers who actually leave comments in our videos. They talk about, hey, listen, my credit score is just 650. Do you think I can qualify? But they never talk about business plan. They never talk about financial projections. It's kind of funny. It's really, really crazy. So if you are listening to me right now, or you happen to be one of those who actually ask those questions, your credit score is important, but so is your business plan. But so are your financial projections. You're not going to get away from financial projections. You're not going to get away from business, from writing a business plan. If your goal is to get a startup business loan, no credit check. I really want you to really keep that in your head and never forget that. Okay, the lender needs to know more about you. Come on. Okay, so I mean, it's kind of funny when we see those sort of lazy ass attitudes where startup founders, they don't want to do anything. Like, yeah, I just want to get the cash ASAP. No way, Jose. It ain't happening. It ain't happening. You gotta have a business plan. You need to have a business plan. Okay, and on top of that, you also have to have a one-page pitch. See, the whole thing here is that your business plan is actually your 30-page or 40-page quote-unquote Bible, and your one-page pitch is what the lender will want to read. Okay, it's more like, because the business plan is really for the underwriter. So the bank or the lending institution that you're going to contact, they have underwriters, but they also have other team members. So your other team members are those who are going to read your one-page pitch to have a clear idea about your startup. But your underwriters, the underwriters, are the ones to really dig deeper, to really understand your business, to really understand how you're going to monetize your business, how you're going to acquire customers. Like, they really dig deeper. Okay, but your one-page pitch is really important also. So bottom line, you need both. You need to have a business plan, and you also need to have a one-page pitch. Okay, so have those two. So you want to talk about how your company is going to make money. So your business, the monetization model. You need to talk about your rivals. So SWOT analysis is really important also. But again, everything I'm telling you, you don't have to do it yourself. You can actually hire someone, or you can use software. There is software, there is business plan software that will create everything for you. Okay, you don't have to do anything. And one thing I also want to say when we talk about startup business, by the way, today's topic, I'm talking to you about startup business loans, no credit check, massive approval, how to get approved no matter what. You got to talk about financial projections. Yeah, if you remember, the very first thing that I said when we started today's conversation, I said what? I said cash flow is important. Cash flow, baby. It's all about cash flow. And it doesn't matter whether you're a startup or whether you are an established business, because you want to have a loan, right? Okay, you got to be in a position where you got to tell the lender, hey, listen, I'll have the cash to repay you, because that's what they care about. Because the lender is really first of all, the lender is looking at your business, and they're thinking this is a startup, which means there is like 90% of risk of this company actually going out of business in the next 3 to 5 years. Those are statistics. Those are facts. So they are really worried. They're worried already. And on top of that, you're asking them to not to check your credit. So you got to give them something. You have to give them something. And this is what the business plans helps accomplish. This is where the financial projections help accomplish. As I said earlier, financial projections must be realistic. Okay, don't actually start your projections and say, well, hey, listen, yeah, I'll make $1 million in the first year. I'll make a profit in the first year. I'll make 10 million the second year. Blah 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 blah. If your business is indeed making $1 million the first year, then you have to find a way to actually prove that through realistic assumptions. I really want to insist on the word realistic, because we see a lot of business plans from viewers and our own customers, our own business customers, and you're like, wow, those numbers really are far off. Like, even the leader in this market is not pulling those numbers. How come you, a newbie, a new kid on the block, can actually pull those numbers in year one? Those don't make sense. And it's simply because a lot of startup founders, They are so enthusiastic, they are so optimistic about their business model, they forget about reality. So there's a fine line between being overly optimistic and just being an outright liar. So this is why it's important to really understand that you got to be very careful here and not overstate reality or overstate the truth. The next thing I want you to do here is, and this is a bonus for you. So I just shared with you the 5 things that always assure success. Cash flow is important. Link the use of funds to operational growth. Initiate the loan convo before actually applying. Have a business plan and one-page pitch ready. And talk about financial projections. So those are the steps you need to follow, okay? Now, I want to give you a bonus because if you have made it so far, you must be interested in this topic and you really want to, you're really intent on getting that business loan. And the bottom line here is you want to make sure your business is legit. If you have a startup right now, if you are looking for a startup business loan, no credit check, make sure that you have a legit business. You will be really surprised. A lot of folks who said that they have a startup, and then when you really start investigating, you realize they don't have a business. They don't have an actual business. Okay, they're just talking. You start asking questions, and they're just trying to evade the question. So when we talk about having a legit business, make sure that you really have an LLC, an S corp, a C corp, like you have an actual company. If you have a sole proprietorship, you are never going to have a startup business loan, no credit check. I just want you to think about that. You will never going to have that. So you got to be a business. You got to be a real business if you're trying to get away with the credit check part of things. So get your incorporation or your organization paperwork from the states. You also need to make sure you have your EIN from the IRS. Okay, make sure you actually have you got to obtain the appropriate business permits and licenses depending on the industry you're in. So you got to really do everything you have to do. You have to take care of to make sure that you give the appearance of a legit business. Okay, and this is not something you have to just do at the last minute. No, if you remember earlier, I was just talking to you about what you have to start the convo about the loan long before applying. So this is why you want to give yourself some time. So if you start the conversation long before, the lender would have filled you in on the most important criterion when it comes to being approved, and maybe part of it will be to get your business licenses and permits. Okay, so this is why it's really important to start the conversation really early. Also, think about having a business bank account. This is important. You cannot have a startup and you're looking for a startup business loan and only have a personal checking account. You need to have a business checking account. The last thing I want you to do, and this is also important, is to beef up the founder bio or bios. And this is something we have seen time and again, that sometimes a lot of startup business loan applicants, they're just looking at they are just focusing on the quantitative aspect of things, right? They're looking for they want money, they want $1 million, they want $100,000, and they were just thinking about numbers. They're thinking about financial projections, which is important. Don't get me wrong. They're thinking about, let's say, how much they will do in year one, how much revenue they will produce in year one, how much revenue they'll produce in year two, and so on and so forth. They're thinking about ROI. They're thinking about DTI. They're thinking about the important financial ratios. They're thinking about the quantitative aspect of things, but they just forget about the qualitative aspect of things, which is important also. And when we talk about qualitative aspect of things, one important criterion to remember is the bio of the founders, the founder or the founders. Why? Because when you are a startup, the success or failure of your startup revolves around the founder. Because if you have a very charismatic and experienced founder, chances are the startup is going to thrive. And if the founder is a newbie in the field, and there are other things that don't work in his or her favor, chances are this startup might not last long. This is why it's important for a business lender to see the bio of the person behind the company. You can put this bio in the business plan. You can put this bio on the first page, on the one-page pitch that I just told you earlier about. And what you want to do here is you just have like 1 or 2 paragraphs explaining, giving context around the founder, but you make sure that you attach the founder's resume. This is really important because the lender needs to understand the context that is driving this startup. The lender wants to understand the context that could drive this startup towards success. Okay, so this is really important. And see, again, the whole thing here is that those are little things that a lot of startup founders don't think about, and that actually those things end up making them being denied, because the lenders is just thinking at just a bunch of numbers, and they're thinking, well, yeah, those numbers are kind of cool, but who is actually driving those numbers? We have no idea who is driving those numbers, or the person who is driving that number or those numbers doesn't have the experience. Then you realize, oh, listen, those numbers are just fake because they're not realistic. Going back to what I said to you about being realistic, this is important. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.